Just about 2 to 3 minutes remaining for market opening, likely to be a positive one. Let's welcome in our next guest, Sacchitanand Uttekar, technical analyst at Motilal Oswal Securities, as well as Sushil Choksi, director at Rosy Blues. Good morning, gentlemen. Sushil, let me first start with you. Last week, 3% gains. You think it's all because of excess liquidity in the market?
Good morning, Pankaj. Thanks for having me on the show. I think it is not only liquidity, the event which we spoke in our earlier interaction that around Brexit, the market will surprise a little bit on the negative first to discount the news. And post that, people have realized that event was over in 48 hours. Monsoon picked up, a little bit of noise on GST. And fundamentally, I think emerging market currencies have been not that volatile as what it was expected. So all the negatives got priced in and positivities specifically for India looking very different in terms of positivity compared to the way world is standing. So with domestic cues specifically for post-monsoon and if supported by GST may have a different outlook for Indian corporates. And a lot of buzz about consolidation, some acquisition. That's why you could see a lot of stocks showing 52 weeks high in last week. So I won't say only liquidity. Domestic mutual fund seems to be good, and the bias on interest rates being negative, that is, the rates will fall, which means mutual fund flow will sustain going into the second half. And I think sales growth for the auto numbers reported are pretty stable for June also. And the good point I definitely see forward as a betterment is monsoon deficiency, which was 22% 10 days back, is down to 10% and below. So I think these are all positive news for market to be stable, and if things go well, we can be 10% up between now to December on the Nifty itself.
Right, 10% now means you expect that there could be a new high which could be coming in soon. I'll just come back to you, Sushil and Sachit. The markets have just opened 40-50 points higher now, 8,381 as far as Nifty is concerned. Sensex up about 180 odd points. So looking in strong and looking in stronger than what essentially SGX was pointing out this morning. What's the top gainer on the Nifty pack? So ONGC is up 2.8%. Tata Motors, of course, because of the US numbers that came out, is doing very well. There you go. ONGC is up now 3%, 232, 233. 3% higher. Tata Motors is the next top gainer. It's up about 2%, followed by Tata Motors DVR. Dr. Reddy's is up 1.3. SBI, of course, they have sold 5% stake in NSE for about 900 odd crores. So some fundraising activity over there, 1.3% higher. Lupin, they met a couple of investors. UBS, for one, whom they met, has come out with a positive note. It's up about 1% or so. Hindalco Industries, 126, continues the up move. Overnight, most of the commodity prices except iron ore were on the positive side, so maybe that's also having an impact. L&T, let's just pull up L&T. L&T is up about 1% or so. 12:45 today, the management of L&T would be talking and they would be briefing investors about the L&T Infotech IPO. So there is, of course, some bit of divestment news as far as L&T is concerned. On the broader market front, sugar stocks continue to buzz again. So Bajaj Hindustan, Sri Renuka, all of these stocks, Balrampur Chini, Dhampur Sugar Mills, the first 10 packs, the first 10 broader market gainers are mostly from the sugar pack. Praj Industries is up 4.5 to about 5 odd percent. Again, incremental buzz starting into this name that we may have more compulsory ethanol as far as oil is concerned, but that's been there around for a while. MTNL is up 5%. Some newspaper reports suggest that they've got a big tax reversal or a tax reversal that they have got. So maybe that's
113 crores, Pankaj. That's what we are hearing. Tax reversal. So 5% up on MTNL. Let's just quickly take you through, as Pankaj mentioned, Praj Industries is one of the biggest gainers on the NSE with volume. So we're just picking up things on the NSE, the biggest top gainers on the NSE, and then tracking them by volumes. And Jaiprakash Associates now is also up there. Praj Industries 6% up. Look at Jaiprakash Associates, 3.3%. Unitech gone up, and it's also doing extremely well at the moment. MTNL we mentioned, ONGC, some smaller companies like Aksh Optifiber, Usha Martin, strong volumes there. Balrampur Chini, the entire sugar pack, Sri Renuka, Bajaj Hindustan, Balrampur Chini, strong volumes on all of those. Treehouse Education and Accessories, that's one got a lot of volumes, and that particular counter is up 8% at the moment. Let's just pull that one up. Small company, just has a market cap of about 200 crores. But if you're a trader, and that's only traders are looking at volumes and changes in the beginning, then even a small company is worth looking at. Indiabulls Wholesale Services is up 6.6%. What exactly does that do, Pankaj? Indiabulls Wholesale Services, it's does it trade in the real estate? What does it do?
Well, after the rejig, I'm not really sure what does wholesale services do, but it'll be a part of the securities plus the wholesale lending business probably that Indiabull has.
All right, some retail players. Store One Retail, that one is up about 5% Let's just quickly take a look at that. It actually is, Store One is actually a real estate, it's an infrastructure player, and there's Provogue also up 6%, Infomedia 18, 6% up, Gokul Refoils. Now this one is another very small company, and that's up 5.7%. But these are the ones which have significant volumes here. Ugar Sugar Works 3.5%. Now India Glycol. So that entire lot of I think Bajaj Auto sales are out. Let's say total sales down 4%.
I think 2.5 is what we were expecting a decline. Yeah. So another 1.5% miss as far as Bajaj Auto is concerned. So Bajaj Auto was a miss, Hero was a miss. We'll be talking to Honda. Honda sales grew by 22%. So it will be quite interesting to speak as to what essentially Honda has done. TVS did well. Now we have all the 4 major companies. iShare, of course, moves in a different direction. The sales over there were up 37 odd %. Bajaj Auto.
So Bajaj Auto, Pankaj, the units that we're showing here is about 3.17 lakhs. So that's about 3,17,000. And we expected it to go down by about 3% to about 3.2 lakhs, 3.21 lakhs. So it's not that far off. I think we had rounded it off. So not dramatically low, but still down. Bajaj Auto. So Bajaj Auto had already priced that in, I'm expecting.
Yeah, Bajaj Auto had already priced that in. Their exports is a very big part of their sales. About 1.5 lakh units is what. So we have the export number. See, export number is down 21. This is because of the problems that they are facing. They largely export in African countries, Nigerian countries. So there have been some problem. That was also a case with TVS Motors, where sales were down about 9 odd %, and Bajaj, of course, being one of the biggest exporters in the two-wheeler.
In fact, if you look at the Bajaj Auto domestic sales numbers, they're actually pretty encouraging, 11%, and they focus entirely on the higher end.
Right, they focus entirely on the higher end. Higher or mid or the mid-higher end. So I think the numbers are good on the domestic front, but exports continues to surprise on the negative side. Again, as you said, it's a very, very marginal miss, less than 1% or so. So I don't think the street would be much worried. In fact, they would be looking out for commentary, looking out that how essentially they expect the upcoming festival season to be. And I think that's where the focus will be as far as Bajaj Auto is concerned. Let's look at Hero as well. What is it doing? Hero was also a miss. So if you look at Hero MotoCorp, it's largely flat, really no major change, down about 13-14 rupees. TVS is on the positive side. TVS, I think, is up 1.5, but the numbers were very good. It was up 12% on a year-to-year basis. This is one company that has been growing, though towards the lower end of the market, but still.
So the interesting thing is that if you look at the domestic sales, TVS actually did badly even in terms of exports. Bajaj Auto doing badly in terms of exports. Domestic sales, two sides of the end. Now, if you look at TVS's, let's try and pull up the TVS sales numbers for you, and we'll go across to our guest Sacchitanand, who actually has a technical call on Bajaj Auto. I'll ask him about TVS as well. Let's pull up the TVS sales numbers if we have it. There you see. Exports are actually down 9%, scooter sales are up 10%, and the total grain is about 11% up. So their entire scooty lot is doing well. And Bajaj Auto, again, as you can see at the bottom of your screen, 11% growth in the domestic market, which is the higher end. So the two-wheeler space is actually doing reasonably well inside the domestic market. So let me start off first again with Sacchitanand, the technical call on Bajaj Auto.
Well, good morning. As you have seen, two-wheeler space has been very consistent, especially a stock like Bajaj Auto, which saw a breakout from a triangular pattern on the intermediate scale at around 2400 levels, and post that it has been in a consistent higher top higher bottom cycle. Even right now we are seeing a bit of consolidation here, which augurs well with the overall trend. We expect the stock to scale higher towards the initial level of around say 2760, 2780, and this particular move can be participated with a stop loss around 2600. So it's a very fairly consistent trend, and every decline or a sideways consolidation is again a good opportunity to create long positions in a stock like this.
Let me get in Sushil as well. Sushil, do you track Bajaj Auto? I'm sure you do, but do you have a clear, do you hold an opinion about it?
Hearing into Rajiv Bajaj's interview recently on one of the rival channels, the strategy to come out with a bike, something in a newer fashion or newer model compared to Royal Enfield, is something what I would watch out for, because one is, if it's a healthy competition to Royal Enfield with a small base also to start off, and I keep hearing some buzz about some new innovation on the older products, because a lot of two-wheeler imbalances were created in the past. Now scooter is eating into bikes right now, so how each player positions itself, and I would look out for a strategy from Bajaj Auto that with newer models how they are going to take on other major producers like Hero Honda or Honda and Scooty and otherwise. So on a weakness, I think Bajaj Auto seems to be a good buy, because they have highest margin, very well focused company. They can come out and innovate new products. So I would watch out for a strategy in the festive seasons to come by and then take a call on the stock. But I think around 24,000-25,000 the stock would be a good reasonable buy on a long-term basis.
All right. So obviously you want a correction of about 150-200 rupees before you buy it.
Yeah, but it's subject to what the market conditions are.
Okay. All right. TVS, Sacchitanand, any opinion about TVS?
If you look at the TVS, we've already seen a good amount of momentum in last few days. The stock has now reached the overbought zone, and if you look at the activity there, if you look at the month of May, early month of May, wherein we saw a good amount of selling pressure, this particular pressure was near the bounds of around 320, 325. So the stock is approaching that level. So I would rather await for a decline to take place, and would avoid creating any fresh long positions at this point of time from a trading perspective.
Sacchitanand, you've given us quite a few stocks to look at. I'll start off with some of the infrastructure names. Let's start with, for instance, Bharat Electricals. Why are you saying it's a buy?
Well, if you look at infra, we are expecting outperformance in this particular sector in next couple of months. If you look at BEL for say, the stock has been oscillating within a band of around 1400 on the higher side and 1100 on the lower side. We have a pennant kind of a formation on the daily scale, which is very much mature and which is indicating a move back to 1400 levels. So a very good trading opportunity is available here. The stock can be participated on the long side. We expect a fresh leg to come in soon, wherein longs can be initiated right now with the stop loss at around 1210 for an immediate target of around 1400.
1400, right. Bharat Electronics. Pankaj.
Right. Sushil, I wanted to ask about ONGC Oil India. Any particular view on these names? They have been big, underperformers, but we are seeing some sort of action today with decent volumes. Would you be a buyer into these names?
I would not trade ONGC Oil India just because oil prices have stabilized, consumption patterns have got better, $48-50 and the rupee at 67. ONGC seems to be in benefit, but the way this acquisition and expansion is being looked at, specifically ONGC, whether they are buying into GSPC or they're looking into some overseas fields. 23-25 million is a stagnant production for last 2 decades. And it's pure direction, because what I understand, the subsidy regime even on 2 products which are left is likely to get eradicated because DBT coming in place specifically with kerosene. So all these companies will have a free pricing mechanism going forward, but for a 10% or a 5% gain specifically on a commodity like oil, I would not look at it. I understand it may be a value investment because oil trading at 40-50 range, and for some reason India needs them, and if the oil heads to 70, ONGC will make bumper profit. But I still would not trade ONGC for a short term. If somebody has a value investment theme, then the price may be attractive.
Right. As far as Tata Motors is concerned, it's now at the day's high, up 2.7. Irrespective of the domestic numbers, because of the JLR US sales that we are seeing 44% growth coming in, would you be a buyer of Tata Motors?
See, I like Tata Motors for two reasons, and specifically I recommend DVR with a differential which is above 150 rupees at current market as of today, or a little higher than that. Jaguar sales is one part, Land Rover and Jaguar combined together. Brexit had a lot of negativity on the stock, but keep in mind, pound weakness will become a exporting opportunity for all British production. At the same time, they've already put up a second plant in European Union. Does European Union give you a preferential status to Britain? That we need to watch out. More important is India commercial vehicle sales. With the current economic state, means where the economy is headed and how replacement market is going to work, plus new demand, incremental sales of 20-25% on trucks would change the entire scenario for telco, and Tata Motors can do wonders for stock investors. So my personal belief is, with commodities being flat or positive in terms of where margin inputs are concerned, and commercial sales going up along with JLR being stable, I think stock can outperform the market by miles.
Sushil, we were looking at a report today and from Deutsche Bank, and it's given a sell on Thermax and Siemens, and they seem to believe that the private sector capex cycle is not going to pick up anytime soon, and there's no reason to hold on to these stocks. Do you agree with that?
See, if you look into RBI credit policy statements over a period of last 4-5 quarters, capacity utilization of Indian industry is between 72 to 75%, depending on which policy you read in. Based on the current outlook, cement and steel, which are prime drivers of big capacity and you need a lot of support in terms of capex, private sector is not likely to put up new capacity, because cement, we know, it's 400 million tons of capacity. We are producing around 260-280 million ton range right now. News about Lafarge consolidation bids are going to close out today. We can see JP News. So once a consolidation happens, utilization go up to 80% on cement. Same way in steel. Stability doesn't happen, the private sector capex will not pick up. Until that, Thermax or Siemens may be more dependent on other sectors, but Thermax is concerned will have a little struggle, and their global policy is still not in place because of exports, and that needs, because the export market is not that lucrative right now in terms of getting orders, as well as you're looking for different markets. And Siemens may be a more domestic play which can get support and can surprise compared to other capital goods stocks, because liquidity is poor. At the same time, I think it always commands a higher P. So I would not agree on Siemens to a great extent, but Thermax possibly one needs to take a longer term forecast, and possibly post monsoon between September and January, people may look at these stocks based on what the Indian private sector is likely to do in terms of their capex cycle going forward. But there are some positive news at the same time, like today, that 60 million ton refinery which government wants to put up at a capex of 2 lakh crores, which is like 4,000 crores per million ton, which is pretty expensive. So Engineers India may start off with design, and other implementations are concerned with a long-term outlook. But ultimately Thermax or Siemens or any of these equivalent companies which may be not connected to oil, but the other side, the other newspapers carrying huge capex cycle where roads are concerned. So I think there are early signs of capex cycle may pick up, but you may see 6 months of buzz and reality where these companies are concerned, possibly from the third or the fourth quarter.
Okay, you were talking about cement, that consolidation, of course, the Lafarge Holcim selling out, consolidation taking place in JP's units going. What does that mean for the cement sector?
I think the valuation based on these acquisitions, like bankers are asking for higher value where JP is concerned. I don't know after the deal why this spoken, the wheel is round the corner. But Lafarge is being spoken at 900 crores per million ton. So basically, based on that means the dollar pricing wise, we are already talking at $130 acquisition target compared to 100, 110 which was factored in. So people will start valuing current cement capacities based on your yardsticks at a better way, because utilization is going up and your logistic on energy cost being stable, the margins on cement can get better. So one side is demand outlook likely to move towards double digit. At the same time, input and logistic costs are under control, led by coal and diesel, which means cement better days are around the corner, and specifically with government policy, with roads being expanded 27 kilometers a day, and we are talking about rolling out a lot of more infrastructure led by road and ports and affordable housing. So cement maybe the 3-4 year outlook may be doing very well, specifically where capacity utilization is concerned, and that may be a key driver.
Given that there's consolidation likely, what kind of cement companies would you buy? Would you go for the larger ones or the smaller ones where one can find some value?
I think value investment will give you a higher return at this time, but ultimately you'll have to stay with the big four, specifically the Holcim Group or Ultratech or companies like Ramco Cement in South, or one or two other names where possibly this stock on a long-term policy and operating parameters where cement margins are concerned, these companies have done well. So ultimately the margin and volume will decide. The brand pull is a necessity for sales, and that would decide the ultimate future of these companies.
Right. Sushil, just a word as far as hotel industry is concerned. We got some news flow on Indian Hotels, some calls coming in on the positive side that they have sold their US business for about 50 million. It's very low in terms of debt repayment if you were to look at the amount of money. But if they largely continue in this direction, you think it's a business that has a lot of negatives priced in rather than any changes in the industry?
I think to a great extent because of Indian hotel moving for overseas acquisition over a period of last 1 decade, and now they've decided that there'll be more niche, specifically India driven, or they'll operate and manage hotels and divest all these overseas properties where they had invested. It's a positive news, and the domestic business seems to be on a virtual capacity utilization. I mean, room rates as well as room number of nights is getting better. So as business gets better, I think I'm quite sure with airline tickets being cheap, people are traveling more, holidays as well as business travel, both picking up. Hotels typically do 50-50 between F&B and residential rates wise, rooms wise. So I think Indian hotels seem to be fair placed with the strategy that they're more domestic company rather than only global in nature.
Right. Sachit, any view technically on ONGC? I think 233, this is also the budget high, or it's gone ahead of the budget high right now?
Well, if you look at the counter, after February 2015, this is the first time when the counter is trading above its 200 days exponential moving average. But if you look at the overall trend, it has been consolidating at the base around 220, 200 days. That has been a firm base so far. We'll have to really watch out for this particular counter in next couple of trading sessions, whether this particular move sustains or not. Even if you look at today's movement, the volumes are not that lucrative so far. But yes, the stock has managed to close about 225, 220 zone, where it had been facing a lot of resistance. So it's a very good positive surprise. In case if this particular momentum continues, the first indication would be we may not see a pullback back around 225. So the run should just continue from here on, and we may see the counter trading back at around 245, 246 soon.
Right. Sachit, thank you so much for taking out time for us. Sushil, always a pleasure talking to you. On that note, we're taking our first break, our first after opening. Sensex up 200 points, Nifty